Let's learn about accounting standards. Life can be organized without rules. They're designed to ensure fairness, safety, and respect for other people's rights. In accounting, there were accounting standards created to specify how transactions and other events are to be recognized, measured, and presented in financial statements. Historically, the Canadian Institute of Chartered Accountants has established that standards for Canadian accountants. These standards are made available in the CICA Handbook, which is a publication that is updated regularly so that it reflects current accounting opinions and decisions. The objective of such standards is to provide financial information to investors, lenders, creditors, contributors, and others that is useful in making decisions about providing resources to the entity. The CICA committees combine to form one separate governing body called the Accounting Standards Board. It has adopted international financial reporting standards as the accounting standards to be used by public companies. Their goal is to create one set of accounting standards throughout the world. This goal is especially important due to ever-increasing globalization and the growing number of multinational corporations. A few examples of the accounting standards include the cost principles, the continuing concern concept, the business entity concept, and the revaluation model. The business entity concept is a long-standing principle that keeps accounting for a business organization separate from the personal affairs of the owner or other businesses. Without this concept, the records of multiple entities will be intermingled, making it quite difficult to determine the financial position of a business. The cost principle is another basic underlying guideline in accounting. It is also known as the historical cost principle, which requires accountants to record the value of assets at their historical cost price. On the other hand, the revaluation model gives a business the option of carrying a fixed asset as its revalued amount. It outlines an accounting procedure that allows accountants to change the value of a particular asset based on market conditions. Related to the cost principle, the going concern concept assumes that during and beyond the next fiscal period, a company will complete its current plans. It allows a company to defer some of its prepaid expenses until future accounting period. Accounting standards such as IFRS are important because they provide the backbone for integrity and trust in the financial markets. When all corporations are required to stick to one set of accounting standards, investors can be confident that the financial information they use is accurate and can be compared between all companies and across all market sectors.
Created using Powtoon.